Are you excited to see how the world's most powerful tech giants performed in the first month of 2024? The Magnificent Seven, Alphabet, Amazon, Apple, Meta, Microsoft, Netflix, and Tesla are all set to reveal their results this week. Join us as we dive into the expectations, outlook, and trends shaping the tech sector this year. This video is a must-watch for investors and tech enthusiasts alike. Alphabet: can Google keep growing its ad revenue? Alphabet, which is Google's parent company, is due to report its earnings on Tuesday, February 1st, after the market closes. Analysts have predicted that the company will post earnings of $33.64 per share on revenue of $77.15 billion. This represents a year-over-year growth of 23.6% and 19.4%, respectively. Google is the leader in online advertising, and its ad revenue is expected to remain strong in 2024. This will be driven by the recovery of travel, retail, and other sectors that were hit hard by the pandemic. Google also benefits from its dominant position in search, video, and mobile. Additionally, it is expanding its presence in cloud computing, hardware, and artificial intelligence. Despite its success, Google faces some challenges and risks. These include increasing competition from rivals such as Amazon and Meta, regulatory scrutiny, antitrust lawsuits in various markets, and rising costs and investments to maintain its innovation and growth. Amazon: will e-commerce and cloud continue to shine? Amazon, the giant in e-commerce and cloud computing, is set to report its earnings on Thursday, February 1st, after the market closes. Analysts predict that the company will post earnings of $14.10 per share on revenue of $130.16 billion, which is a year-over-year growth of 10.2% and 12.9%, respectively. As the leader in both e-commerce and cloud computing, Amazon's businesses are expected to continue to thrive in 2024, with more consumers shopping online and more enterprises migrating to the cloud. Amazon also has a diversified portfolio of products and services, such as Prime, Alexa, Kindle, Fire TV, and AWS, that generate recurring revenue and customer loyalty. However, Amazon also faces some challenges and uncertainties, such as slowing growth and margin pressure in its core e-commerce segment, increasing competition from rivals like Walmart and Shopify, regulatory scrutiny, and labor disputes in various markets. Additionally, the transition of its CEO from Jeff Bezos to Andy Jassy is also a factor that needs to be considered. Apple: can iPhone sales keep up the momentum? Apple, the renowned producer of the iPhone, iPad, Mac, and other devices, is scheduled to announce its earnings on Wednesday, January 31st, after the market closes. Analysts anticipate that the company will post earnings of $2.03 per share on revenue of $120.48 billion, indicating a 4% and 8.6% year-over-year growth, respectively. As the world's most valuable company, Apple is expected to maintain robust iPhone sales in 2024, thanks to the demand for its latest iPhone 16 models. These models feature 5G connectivity, improved cameras, and longer battery life. Apple's strong ecosystem of accessories and services, together with its leadership in wearable devices and smart home products and its loyal customer base, also contribute to its success. However, Apple faces challenges such as declining growth and saturation in its smartphone market, increasing competition from rivals like Samsung and Huawei, supply chain disruptions and chip shortages, and legal battles and antitrust probes in various markets. Meta: can the social media giant reinvent itself? Meta, the company that was previously known as Facebook, is scheduled to release its earnings report on Wednesday, January 31st, after the market closes. Analysts predict the company will post earnings of $3.87 per share on revenue of $34.97 billion, which represents a year-over-year growth of 8.4% and 16.8%, respectively. As the largest social media company in the world, Meta is expected to maintain its solid ad revenue in 2024. This will be driven by the recovery of the online advertising market and the popularity of its various platforms, including Facebook, Instagram, WhatsApp, and Messenger. Furthermore, Meta has a growing presence in e-commerce, gaming, and virtual reality, and has a bold vision to create the metaverse, a digital world where people can interact and socialize in immersive ways. However, Meta also faces several challenges and risks. For instance, the company has experienced declining user engagement and growth in its core Facebook app. Additionally, it faces stiff competition from rivals such as TikTok and Snapchat, regulatory scrutiny, and privacy lawsuits in various markets, and increasing costs and investments needed to build and maintain its platforms and products. Microsoft. Can the software giant keep surpassing expectations? Microsoft, the giant in software and cloud computing, is set to reveal its earnings on Tuesday, January 30th, after the market closes. Analysts predict that the company will report earnings of $2.93 per share on revenue of $62.02 billion, demonstrating a year-over-year growth of 24.7% and 18%, respectively. Microsoft is known for being one of the most dependable performers in the tech sector, with its revenue and earnings expected to surpass expectations once again in 2024. This growth can be attributed to the strength of its cloud computing, gaming, and productivity businesses. Additionally, Microsoft benefits from a diverse range of products and services, including Windows, Office, Azure, Xbox, LinkedIn, and more, which generate recurring revenue and customer loyalty. However, Microsoft also faces several challenges and uncertainties, such as slowing growth and margin pressure in its core Windows segment, intense competition from rivals like Amazon and Google, regulatory scrutiny, antitrust lawsuits in different markets, and rising costs and investments to maintain its innovation and growth. Netflix. Can the streaming leader fend off the competition? Netflix, the leading streaming entertainment company, is expected to announce its earnings on Tuesday, January 30th, after the market closes. Analysts predict that the company will report earnings of $1.36 per share on revenue of $7.48 billion, indicating a year-over-year growth of 3.8% and 15.9%, respectively. Netflix is a pioneer and leader in the streaming industry, with its subscriber base and revenue expected to continue to grow in 2024. This growth is driven by the demand for online entertainment and the quality and quantity of its original content. Netflix also benefits from its global reach, pricing power, and data-driven approach to content creation and recommendation. However, Netflix is not without challenges and risks, such as slowing growth and market saturation in mature markets, increasing competition from rivals like Disney+, HBO Max, and Amazon Prime Video, rising content costs and licensing fees, and regulatory hurdles and censorship in various markets. Tesla. Can the electric vehicle maker deliver on its promises? Tesla, the clean energy and electric vehicle manufacturer, is expected to release its earnings report on Wednesday, January 31st, after the market closes. Analysts predict that the company will report earnings of $1.25 per share on revenue of $14.43 billion, which would represent a YoY growth of 25% and 44.4% respectively. Tesla is currently the most valuable car company in the world, and its sales and revenue are expected to remain strong in 2024, driven by the high demand for its more affordable mass-market vehicles, the Model 3 and Model Y. Additionally, Tesla is a leader in battery technology, software, and autonomous driving, and is expanding its presence in solar and energy storage. Despite its many strengths, Tesla also faces some hurdles and risks. These include slowing growth and margin pressure in its core vehicle segment, increasing competition from rivals like Volkswagen and General Motors, supply chain disruptions, chip shortages, legal battles, and regulatory probes in various markets. The technology industry is a highly attractive and profitable sector for investors due to its potential for growth, innovation, and high returns. However, investing in the tech industry can come with challenges such as volatility, uncertainty, competition, and regulation. To mitigate these risks, investors need to be strategic and careful in selecting which tech stocks to buy, hold, or sell in 2024. Investing in a mix of the Magnificent Seven and other promising tech companies like Shopify, Spotify, Zoom, Nvidia, and more is one such method. Another approach is to invest in tech through exchange-traded funds, ETFs. ETFs offer a cost-effective and convenient way to gain exposure to a wide range of tech stocks. Regardless of the investment method chosen, it is important to conduct thorough research and analysis, as well as due diligence. Investors should follow the latest news, trends, and earnings reports of tech companies, prepare for possible market fluctuations, corrections, and crashes, and adopt a long-term perspective with a risk-adjusted strategy. The tech sector is still the place to be in 2024, as it continues to lead the market in terms of growth, innovation, and returns. The tech giants of the world, such as Alphabet, Amazon, Apple, Meta, Microsoft, Netflix, and Tesla, are expected to report strong earnings results this week, and their numbers could have a significant impact on the market sentiment and direction. And that's it for this video. We hope you enjoyed watching it and learned something new. If you did, please give this video a thumbs up and share it with your friends. Also, don't forget to subscribe to our channel and hit the bell icon to get notified of our future videos. We have more amazing videos coming up, so stay tuned. Thank you for watching and see you next time.